Okay, so on paper, the world has never, ever been wealthier. But what if a lot of that wealth isn't actually real? Today, we're diving into a really fascinating McKinsey report that asks a pretty tough question. Is our global economy built on a solid foundation, or is it more like a house of cards, just waiting for a strong gust of wind? So let's just start with a number that is, well, it's kind of hard to wrap your head around. A couple of years back, the world's total wealth hit $600 trillion. I mean, just to put that into perspective for a second, that's more than 5 times the entire planet's annual economic output. It is an absolutely mind-boggling amount of money. But here's where the plot really thickens, and it's the question at the very heart of this whole thing. How much of that wealth is real? What if a massive chunk of it is just paper wealth, not tied to any real productive growth? And maybe the most important question of all, what happens if that bubble decides to pop? All right, so let's dive into the symptoms. Because while our collective bank accounts might say we're richer than ever, the global economy is flashing some serious warning signs. It's dangerously out of sync. You've got wealth and debt growing way, way faster than the actual economy that's supposed to be holding it all up. Here's a great way to think about it. Imagine the global economy is like a bunch of spinning tops, all balanced precariously on top of each other. Now, for years, super low interest rates acted like a steady hand, keeping them all spinning perfectly. But now, any little wobble, a sudden change in rates, some kind of shock to the system, and the whole thing could just come crushing down. So, how do we actually know for sure that things are out of whack? Well, the report gives us this really incredible tool called the Global Balance Sheet. You can think of it like the ultimate financial health checkup for the entire planet. It tracks absolutely everything: real estate, stocks, debt, you name it. And when you start to look under the hood, yeah, some pretty worrying numbers start to jump out. Okay, get ready for this. Here is the first major red flag: 36%. What is that? Well, that's how much of all the new household wealth created since the year 2000 was completely, utterly disconnected from the real economy. I mean, just let that sink in for a second. More than a third of all that new money wasn't from building things or inventing new stuff or creating jobs. Nope, it was paper wealth. It just appeared because the value of assets we already had, stocks, houses, just went up and up. In fact, get this, less than 30% of all that new wealth came from actual real-world investment. And of course, there is the other side of this coin. While we were busy creating all this paper wealth, we were also racking up debt like there was no tomorrow. For every, and I mean every, single dollar of new productive investment over the last couple of decades, the world took on nearly $2 of new debt. We've basically been funding our entire lifestyle on a global credit card. And the warning lights don't stop there. You've got global debt that's hovering near all-time highs. You've got wealth inequality that's just become, well, deeply baked into the system. And the financial gaps between major countries, they're wider than ever. The bottom line is, the whole system is under a ton of stress right now. Okay, so we've got the diagnosis. The system is stressed. So what's the prognosis? Well, this is where it gets really interesting. The report lays out 4 very, very different futures for the global economy. It's like we're standing at a major crossroads, and the path we take from here, it's going to have massive consequences for everyone. Let's quickly walk through these 4 paths. First up, the best case. It's called productivity acceleration. This is where we basically innovate our way out of the problem and create real, sustainable wealth. Then you have sustained inflation, where prices just keep rising and slowly eating away at the value of your money. A third option is a return to the past era, which means really sluggish growth and always feeling like we're on the edge of a crisis. And then there's the worst-case scenario, a balance sheet reset. That's a fancy way of saying a massive market crash followed by a painful, lost decade. And here is the absolute crucial point. The report is crystal clear on this. Out of those 4 options, only one of them, that productivity acceleration path, is genuinely a good outcome. It is the only future where we get to grow both the economy and our wealth in a healthy, lasting way, without some sort of really painful trade-off. So this all leads to the big "so what" question, right? What does all this high-level economic talk actually mean for your wallet, for my wallet? Well, the report breaks down exactly what's at stake for regular people in the world's biggest economies, and honestly, the numbers are pretty staggering. Let's start with the United States. Look at this. For the average American, the difference between the best case scenario and the worst case is a whopping $160,000. If we get this right, that's an extra $65,000 in real wealth per person. But if we get it wrong, that's a loss of $95,000. I mean, the stakes just could not be higher.
And it's a really similar story over in Europe. Let's take Germany. Choosing that healthy, productive path would add about $25,000 to the average person's wealth. But the wrong path, a balance sheet reset, would wipe out that same amount. That's a $50,000 swing between things going right and things going very, very wrong.
And what's really telling is that even in a place like China, which has seen incredible growth, the risks are very real. If they don't shift to a healthier economic model, regular households could actually see their wealth stop growing or even shrink, something that hasn't happened in a generation. The right path adds $25,000 per person. The wrong one takes $5,000 away.
So, okay, if that productivity acceleration path is the clear winner, how in the world do we get on it? The good news is, the report doesn't just drop this heavy diagnosis on us and walk away. It actually offers a prescription, a clear game plan for how the world's major economies can get back into balance.
Basically, it's a huge global rebalancing act. Think of it like a three-part plan. The United States needs to save more and borrow less. Simple as that. Europe needs to invest more of its money at home to get its own growth engine firing. And China needs to get its own citizens to consume more, shifting away from just making stuff for the rest of the world. Everybody has a very specific job to do. And that brings us to the final and maybe the most critical question of all. In a world that's as connected as ours is today, this can't just be a solo project for each country. It really has to be a coordinated team effort. So what happens if one of the major players decides not to play their part? Can the others really succeed on their own? That is the huge challenge and the big unanswered question we're all facing.